When it comes to choosing between Fidelity and Fisher Investments, the decision really boils down to your unique investment needs and personal preferences. Both firms have their own strengths, but they cater to different types of investors, so it's worth taking a closer look at what each one offers. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. Let's start with Fidelity. If you're someone who likes to have a lot of options at your fingertips, Fidelity might be right up your alley. They offer a vast array of investment choices, from mutual funds and ETFs to stocks and bonds. Plus, their online platform is not only user-friendly, but also packed with research tools and educational resources that can help you make informed decisions. What I really appreciate about Fidelity is that they're known for their competitive fees, which means you can potentially save a bit more on costs while still having access to a broad range of investment options. And if you ever need help, their customer service is reputed to be top-notch. On the other hand, if you're looking for a more personalized touch, Fisher Investments might be more your speed. They're known for catering to high-net-worth individuals and institutions, offering personalized investment management services. What's interesting about Fisher is their focus on active management, which means they're looking for ways to outperform the market. A strategy that might appeal to you if you're looking for more than just average returns. They also take a global perspective in their investment approach, which could be a big plus if you're interested in international diversification. However, it's worth noting that this level of service comes with a higher price tag. Fisher's fees tend to be steeper than what you'd find with a more traditional brokerage like Fidelity, reflecting the personalized advice and active management you're paying for. So how do you decide? It really comes down to how involved you want to be in your investments and what you're willing to pay for. If you're comfortable managing your own portfolio and want access to a wide range of options with lower fees, Fidelity could be a great fit. But if you prefer a hands-off approach with personalized advice and are okay with paying a bit more for that service, Fisher Investments might be the better choice. In the end, it's all about finding the right match for your investment style and goals. Both Fidelity and Fisher Investments have a lot to offer, so it's worth taking the time to figure out which one aligns best with your financial needs.